Hey guys, it is time to prepare for opportunity. There's going to be a lot of times where there's going to be capitulation points, whether in stocks, whether in cryptocurrencies, where you're going to want to act. You got to take action. A lot of assets are going to come down in price and you'll be able to get them at a much lower price. But the point is, it's not yet. It hasn't been a capitulation point yet in stocks. It hasn't been in cryptocurrencies. It hasn't been in asset values. But it'll come up here, and when it does, whoever's prepared for it ahead of time is going to be able to take advantage of it. You don't want to wait flat-footed until there's the opportunity to act and then learn everything and try and act at that point.
Nothing we say here is intended as personalized trading advice for you. And just always know that Peter Leeds and the Peter Leeds team loves you. We do this for you. We do it because of you.
Rather, you want to know what actions you're going to take and be set up and ready to go, so when it presents itself, when that opportunity shows up, you jump in with both hands. There's a lot of times where things like, for example, cryptocurrencies will crash out, they'll capitulate. Everyone's throwing out the baby with the bathwater, and it's going to be a lot more effective and profitable for you to get in really aggressively at that point. And I'm going to tell you when that is. That's why you subscribe to these videos. Same thing for stocks. We're not done going lower, and I've been talking about this from over half a year ago, for even longer than that. There's a lot lower to go. We're going to wash out a lot of this overvaluation. Is going to become undervaluation. It's like a pendulum. It becomes overvalued. When it corrects, it goes into undervalued territory, and that's when you load up. That's where you can make a lot of returns on your investments. It's not now. You shouldn't be looking for what to invest in now. You should be looking for which altcoin to invest in now. And when the altcoins are done washing out, you should be getting into cryptocurrency, specifically Bitcoin only, or maybe Ethereum. You get into that one. You don't get into all the other players in the industry. There's a lot of risk there. It's a landmine field. But the point is, after all this, people are seeing the curtain being pulled back. They're returning to reality. They're getting out of this delusional market. And a lot of what's going to happen, as it always does, there's going to be a return to the value and effectiveness of solid, fundamental investing. And it was actually an email question I got from Hakeem, who is a subscriber. He bought the Peter Leeds Academy. He's learning about all the fundamentals and how it works. And this entire video is inspired by his question that he sent to me. In fact, I was going to direct him to another video we had about this exact question he had, but I don't think that video is there anymore. We've taken down a few of the older videos. So this is going to be the new video, showing you everything you need to know about how to look at a company's fundamentals and all the stuff that people are scared to look into. And I'm telling you, it's not that complicated. It's not that difficult. It's actually quite easy. And if you know how to do this, as I'm going to explain it to you now, and I promise you, you'll never hear a more clear and concise and simple explanation of how this all works than in this video. When you know how to look at things the right way, you can get involved in the right kinds of companies from a fundamental basis, which is going to be very rewarding, very profitable going forward once everything's capitulated. With the right kinds of fundamental investing, when you look at the financial statements, you can compare a company to itself, compare a company to its direct competitors, compare a company to any other company, even a small company with 5 employees. You can compare directly to Microsoft or IBM or ExxonMobil if you look at the financial ratios. And I'm not going to get into the financial ratios. That's a bigger topic, and that's more for people who are taking the Peter Leeds Academy. But I'm going to give you a quick overview of everything right now that's going to really make your investing decisions more profitable, more effective. And again, I promise you, you won't get a more clear and concise overview of everything. And I'm going to get into, when we talk about the cash flow statement, I'm going to talk about Tesla and their investment in Bitcoin. And the only reason I'm talking about that is because it will relate directly to the cash flow statement to make an example of what I'm talking about. So look, it's this simple and it's so easy. I promise you, don't get scared away. There's the income statement, the balance sheet, and the cash flow statement. That's it. Literally 3 statements. The income statement shows you how much money a company makes and what it costs them to make that money. And at the end of the day, with all the expenses, do they have any profit left, or do they operate at a loss? The balance sheet is simply a snapshot of the financial position of the company at a certain point in time. And the cash flow statement just shows you the changes in cash for the company based on operations, financings, and investing. That's it. Okay, so I'll take you to the top and we'll go through everything as if it was a lemonade stand. Some kids running a lemonade stand. So the income statement shows you that they had a lemonade stand and they brought in $10 from all the people who bought lemonade. But they had expenses of buying the jug, buying the lemonade powder, and that takes off of their total profit. That's the cost of goods sold. So on the income statement, any company sales or revenue, that's the same thing basically, depending if they're selling a product or a service, but they're bringing in a certain amount of money. There's some costs that take away from that, and that's the cost of goods sold. So after that, the lemonade powder, and they bought a spoon to stir the jug, that is how much money they have. That's their gross operating profit. They put out an ad in the paper to have people come over to the lemonade stand, and that's a marketing cost, and it costs them a certain amount of money. So then you take that off as well. They bought some markers to make some posters to put around town. All of that goes against the total revenues coming in, and whatever's left after all of those expenses, that's net profit. So when you hear a company has earnings, that's after every expense is taken into account. And don't worry about all the line items on a financial statement. That'll scare you off at first. Ignore that. Don't ignore it, but don't worry about it yet. You just need to know how much money they bring in, what it costs to make the profit that they make or take the loss, and then you have an idea. And you can compare them quarter to quarter, see how they did last quarter compared to now. Say maybe they made $10 million, not the lemonade stand, but a company made $10 million, and then last quarter, and this quarter they made $20 million. You see that their revenues are increasing. Then you compare them to their direct competitors, and you see, well, their direct competitors are actually losing revenues quarter over quarter. You compare them to the year before, the competitors and them themselves, and you can compare them to other companies that are way larger. So for example, you look at IBM and you see that their revenues are increasing by 10%, but this company you're looking at, their revenues year over year, quarter over quarter are increasing by 40%. So they're operating 4 times more efficiently from that perspective than the bigger company. And if you want to get to financial ratios, you can compare companies directly to each other, and it removes all differences between the companies. You can compare ExxonMobil to Harley Davidson to your kids' lemonade stand and see who's operating more efficiently. But now we get to the good one, the one I like the best, the balance sheet. And only look at the quarterly balance sheet because it's a snapshot of the financial position. So if you're looking at the annual balance sheet, you see here's how they did when they reported their year last year. Could be 10 months ago, could be 1 month ago, but it could be a long time ago. You look at the quarterlies, that's the most recent information on the balance sheet. And the balance sheet is so simple. It's just showing you what a company owns versus what it owes. So maybe they have $100 in assets, but they owe $150 to the company that they paid for the advertisement. They're underwater. They owe more than they own. Liabilities versus assets. You want to look at current assets compared to current liabilities. Current meaning that it's active or meaningful in the next year. If they have a current liability, they've got to pay that bill within the next 12 months. Something like a factory, you don't trade in and out of that, you don't sell that. You might own that factory for decades and decades. That's a long-term asset, and it'll sit on the financial statements for an excessively long period of time. That makes it a long-term asset. And when I look at a speculative company, like a speculative penny stock, sub $5 a share company, the first place I go is the balance sheet, the quarterly balance sheet. And I look at what do they own versus what do they owe, because that tells you immediately whether or not they're solvent, whether or not they're underwater. You want to make sure that they own a lot more than they owe. It's quite simple. I told you guys this. And the last one is the statement of cash flows. And that's it. We're almost done here. Okay, so see how easy this is? Statement of cash flows shows you what's going on with the money the company has coming in and going out from investing activities, from operations, and from financings. So if the company makes $10 million one quarter, that $10 million goes on to the cash flow statement saying, okay, we've got $10 million more than we did from the last cash flow statement. But then they have an investment that went south really badly and they lost $5 million. So the cash flow statement is now saying from one cash flow statement to the next, there's a difference that they have $5 million more. But then there's also financings. They say we're going to sell a bunch of shares. They raised $2 million. Now their cash flow statement is saying that they have $7 million more than the cash flow statement previous. So you can see money going in and out of the company and keep an eye on that. Compare it to themselves, compare it to their competitors, compare it to other companies as well to get an idea of how fundamentally strong this company is and how well they're doing with their operations. And I hope that Hakeem sees this video because it answers his direct question, and it's a lot easier making a video than typing on my phone and it keeps auto-correcting. You just see the auto-correcting mistakes that is happening here. I'm saying something and then it says like cat pajama jump. And I'm like, I definitely didn't say anything that sounded like that, but that's just the way autocorrect goes, I guess. But I want to tie this all into, to give you an example of cash flow statements, to Tesla. Tesla bought in early 2021 $1.5 billion worth of Bitcoin. So they had $1.5 billion, they moved it into Bitcoin. That didn't change their cash flow statement. It was just a movement of one type of asset to another that had the same value until Bitcoin started going south. And it's changing day by day, minute by minute. But that $1.5 billion investment declined a lot in value, and now it's worth about $900 million. So Tesla's cash flow statement will now show that they are owning $600 million less from earlier this year, which represents about 10% of their total cash, give or take, and it changes all the time. But it just goes to show you on the cash flow statement, that would have indicated that they, from a decision, took a $600 million loss or a decline in total cash flow. And that's the type of things you want to see on the cash flow statement. You want to see how those decisions, those investments are affecting the underlying company's solvency, operations, everything. And I know it's a quick video today. I'm not going outside today. It's not happening. I'm glad to get this video out at all, actually. You just remember that nothing we say here is trading advice of any kind. Peter Leeds and the Peter Leeds team, Stephanie, Tammy, maybe Morgan. Hey Morgan, I don't know if you still watch these videos, but I think I have a good idea for a project for you that I'll talk to you about when I get back to Toronto. Talking about Roman, Jeremy, Vicky now, Marshall, the entire Peter Leeds team. We love you guys. And if I forgot anybody, I apologize. I'm so tired. I love you guys. We all love you guys. We do this for you and because of you. That is a fact, and I'll explain it all to you one day. I think I already have once before. And best wishes until we talk again. We love you guys. And oh yeah, I have something big coming up that I'm gonna roll out as soon as I get back to Toronto that I'm so excited about. This is going to be huge. I'm going to build an army, and I'm going to need you guys to join that army with me. I'll tease you with that right now, and I'll tell you all the details as soon as I get back. Plus, we're doing the gold coin contest as soon as I get back, give or take. All right, thank you guys so much.